Just days before the next Bank of Canada interest rate decision, a new report says nearly half of Canadians are concerned with the impact of rising interest rates on their finances and feel worse about their debt load from just a few months ago. Pattie Lovett-Reid's in studio to join us. This is the top story on our website this morning. The headline, maxed out, 48% of Canadians on the brink of insolvency.
That's right. $200 or less they feel they have between, I guess the start of the month and the end of the month. And it's a pretty serious number. MNP have been tracking this data going back to June 2017. This is the worst report they've had in terms of Canadians and their perceptions. Now, 4 out of 10 say that they are concerned about their debt level, not sure if they have to borrow, but 1 in 4 say they can't make ends meet, John. They know that they're going to have to take on more debt at the end of the month. And so this isn't so much about spending because we're in a low interest rate environment, out there buying things that are considered to be luxury goods. This report is about people saying they simply can't make ends meet, and as a result, they're taking on more debt.
I'm very interested in the dividing line between people who are wondering about whether they'll be able to make ends meet and personal bankruptcies. The one area I take issue with MNP, an accounting firm that has an arm that deals with bankruptcies. I was talking to an economist at Scotiabank, Derek Holt, who notes this is a small sample size.
Right.
If you look at personal bankruptcies in this country, very low, and equity in homes, very high.
Still, absolutely.
So I get it. Let's have this conversation. Rates went up 5 times.
Right,
and
since September 2018. So rates have gone higher. People are feeling squeezed, even if it's a small sample. But I think what this does, John, it's not about the people saying, okay, I'm not going to be able to make ends meet. 41% say they regret it. I think what this does is it brings awareness for you to have the conversation in your household. How close to the margin are we living? Are there things that we could cut out?
Yeah.
What if one of you were to lose your job? Do you have the safety net that you need in place? Have you filed your taxes? Have you got the tax return? And what are you going to do with that money that is your money anyway to be really savvy about it? I think that's the importance rather than the sensational headline.
Oh, yeah, no, I get it. I just feel like there are a lot of reports that come out from industry players that say, be careful. I look back, MNP put out a report in September 2016 where they said 56% of Canadians are $200 or less away from insolvency. So if you're measuring it by that,
we're improving.
We're improving. I know that 2015 was a tough year for the Canadian economy bleeding into 2016, and maybe the point is we're sitting here in 2019, and while there are some dark clouds, we're looking at a record high for the stock market and a pretty healthy job market, and you're still seeing this reading tick up a little bit from the last time around.
And you know what? You could argue, too, that you've got your Christmas bills have come in, and maybe you spent more than you thought you were going to spend, and as a result, you see that tick a little higher, because this is about your perception. So I would also argue that not everyone has a reality check on their real financial situation. There's a lot of assumption that can go on because you simply don't know your numbers, and we see that happen all the time. So maybe people feel a little worse off than they are, because even though the job market that you made reference to has been strong, wage growth has not been. And there have been other areas where we've seen things go higher. If you look at our inflation report, it's getting close to 2%, and we're paying more for gas. We're paying more for vegetables. So there are areas that are costing us more just to get by, and we haven't seen the knock-on effect in wages. So it may feel like we're worse off than we are.
All right, Pattie, I'm putting you to work here.
You are putting me to work. Oh, okay.
Okay, here's the example.
Okay.
Interest rates went up.
Yes.
People were starting to feel a little sweaty. They weren't sure what was going to happen. Now there seems to be a breather. We're going to probably hear that storyline again from the Bank of Canada this week.
Data dependent.
You just told me my grocery bill is getting higher. I've got a line of credit from my bank because it's tied to my mortgage or something like that. I'd like to pay more of it down. If my daily costs continue creeping up, how do I tackle that debt load so that I don't feel like I'm living close to insolvency?
I think the big issue is that you need to know how much money you have coming in, and you got to be really honest about what it is you're spending your money on. I know when I shut down expenses, all of a sudden I find other areas that maybe I overlooked.